For the past 5 days, I have not lost a single trade because of a new strategy that I discovered. For the past 5 days, I have been trading forex, most especially gold, from Monday to Friday without losing a single trade. Today is Saturday, 3rd February 2024, and since Monday I have been trading with this strategy, but to be sincere with you, I have not lost a single trade since Monday till Friday. Yesterday was NFP and the market was highly volatile. There was a powerful downtrend yesterday. Guess what? I caught the trend, and this same strategy was what helped me to be able to catch this powerful down move. So in today's video, I'm going to be unveiling this powerful, mind-blowing trading strategy that has made so much money for me in a short period of time. And this strategy, when you harness it and master it very well, is going to give you financial freedom, and you are going to be profitable consistently back to back in the forex market. Ladies and gentlemen, you are once again welcome to my channel. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS, where I talk about forex trading. I've been trading forex, most especially gold, for the past 8 years. So the essence of creating this channel is to share my experience and also to teach you how you can trade the forex market profitably. So my advice for you guys is to watch this video from the beginning to the end. Make sure you watch the video from the beginning to the end. Don't skip any, and you are going to learn a lot from this video. So the concept that I'm trying to share with you guys is known as supply and demand. Honestly speaking, I never knew that this strategy is one of the best trading strategy that anyone can master. Supply and demand is mind-blowing. Once you understand supply and demand, you will be making money back to back every day. Honestly speaking, once you understand supply and demand, so supply and demand has to do with buyers and sellers, right? Buyers and sellers, they are the people that move the market, right? So sometimes you do ask yourself, why is it that sometimes the market will be in an uptrend, sometimes the market will be in a downtrend, and sometimes the market will be ranging? That is the power of supply and demand, right? So supply and demand is very important in trading once you blend it with price action. So I'm going to share with you how I was able to make money consistently for the past 5 days using this simple supply and demand trading strategy. So before I do that, I want to show you something on the screen for you to understand what I'm talking about. Now, once you look clearly on this chart, you'll be able to understand what I'm talking about, right? At the up is the supply zone, while at the down is the demand zone, right? So the difference between supply and demand is that supply is the resistance level, while demand is the support level, right? So when there is so much demand of product, right, in the market, when there's so much demand of product in the market, the price of that product does what? It tends to go up, right? If there is a demand, let me use this canned water for instance. Now, let's say this canned water now, right? This canned water was just manufactured by Zigzag company, right? And now the canned water was distributed in a particular uh, country, but in that country there is no water, right? They don't have water in that country, so they are always thirsty. And but this is the only company that is producing water for that country, right? Now what happened is this: in other countries this water might be sold for just $1, right? But for the fact that this particular country doesn't have water and this company is the only company supplying the country with water, so the demand becomes too much. Why? Because the supply of the water is small but the demand is much. So what happen now is the price of this water in that country will tend to go up, right? So now the price of this can water will now be sold at $5. Why? Because the demand is too much. So when the demand of a product becomes too much, the price of that product tends to go high. But now what happens if the company now starts supplying so many canned water like this and they become surplus, they become so many canned water in that country to the extent that everybody now owns a canned water, right? Now the supply has become too much and the demand has decreased. So for the fact that the supply of the canned water has become too much, nobody is willing to buy canned water again. So what happened? The company will decide to slash the price down. So they will not slash the price from $5 to $1, convincing people to come and buy the canned water. So when a supply becomes too much, the price tends to go down, right? So this is the concept of supply and demand. And once you understand this concept very well, you will be able to make money consistently in the forex market, honestly speaking. Now if you watch now, you see that at this demand zone there is so many order flow at this demand zone waiting to be triggered, right? The same thing applicable at this supply zone. There is so many order flow waiting to be triggered. So now when you are trading using the concept of supply and demand, you are trading alongside with the big banks, the smart money, the hedge funds, those people that trade in billions of dollars. And you know that these are the people that actually moves the market. We the retail traders don't move the market. We are just participants in the market, but we don't move the market. The actual people that moves the market are the big banks, the central banks, the government, those people with the big money. These are the people that actually moves the market because they are trading in a huge quantity. They are trading in a big flow. They are buying and they are selling in a big, large quantity. So for the fact that we are trading in thousands of dollars, they are trading in billions of dollars, right? So that is why you have to trade along with these people so that you'll be able to make money. As they are making money, you are making money. So that is the concept of supply and demand. Now when we talk of supply and demand, I want to share something with you guys so that you understand what I'm talking about. When we talk of supply and demand, there is what you need to understand. Now in supply and demand, there is what we call rally base drop. Rally base rally, drop base drop, drop base rally. Now let me give you the concept. Now let's go with drop. This is drop, right? This is base, and this is drop. So this is what we call drop base drop. Now we have rally base rally. Now we have drop base rally, and then we have rally, base, drop. Now, if you understand the key components of supply and demand, you should understand this concept, right? So this drop, base, drop means a downtrend, right? This rally, base, rally means an uptrend, right? So now we also have drop, base, rally, and we have rally, base, drop. So the concept of supply and demand is for you to know how the market moves. If a market is in an uptrend, you need to know where the move started for you to be able to take trades, right? So you need to understand these four concepts for you to be able to trade supply and demand zone very well. Now let me show you how I was able to make so much money consistently using this simple supply and demand zone trading strategy. Like I told you, that supply and demand zone has to do with buying low and selling high, right? So now a market will be in an uptrend, right? So the question you ask yourself is, where did that uptrend originated from? When did that uptrend originated from, right? So you have to go down and look at where that uptrend started, right, for you to be able to understand demand and supply. Because before an uptrend, there was a consolidation. That is what we call it base. So consolidation is called the base, rally is called an uptrend, drop is called a downtrend. That is why we have the drop, base, rally, downtrend, consolidation, and uptrend, right? So we also have the rally, base, drop, uptrend, consolidation, and downtrend, right? So you need to know where a trend originated from. So that is where you now discover supply and demand, right? Now, if a market is in an uptrend, right, if you go down, you see that before an uptrend begins, there was a consolidation. At that point where the market was consolidating forms a demand zone, right? So you can use your horizontal line or a rectangle line to map that level and extend it to the future, right? So that when price comes back again to that level, it will tend to do what? Trigger some other flow. Like I say, big banks, hedge funds, they are placing trade in large quantity, right? So when the market is ranging, they are placing their orders in large quantity, and when the order become filled up, the market will tend to go up in a fast movement, right? In a fast movement, and that will cause a massive trend, right? So now, as the market is trending up, have it at the back of your mind that they still have some pending orders that has not been triggered, right? That is what we call the order flow, right? So with time, the market will tend to come back again to that level to trigger the remaining order. So that is why when you see this type of level in your chart, you have to map it and then wait for price to come back to that level for you to do what? For you to place your trade. So by placing your trade, you are trading in the direction of the big banks. So this supply and demand zone has a powerful risk reward ratio, in the sense that you are risking just 20 pips to make over 200 pips, right? Or you are risking 30 pips to make over 300 pips. So the risk reward is so massive. Now, for you to be able to trade this supply and demand zone profitably, you need to work according to the market structure, right? Like I said, the market can be in an uptrend, downtrend, and ranging, right? So if the market is in an uptrend at the higher time frame, endeavor to trade in the direction of the uptrend. If the market is in a downtrend at the higher time frame, endeavor to trade in the direction of the higher time frame, right? Don't ever trade against the trend. So that is the concept. So now, for you to be able to trade this strategy profitably, you need to do what? You need to look at the higher time frame. So what I did is I go to the higher time frame, which is the 4-hour time frame. Now this is the 4-hour time frame, right? This is the 4-hour time frame, and now looking at the 4-hour time frame, we can clearly see the supply and demand zone, right? The supply and demand zone. So now what I do is this: I use a horizontal line to map the supply zone, right? This is the supply zone, and this is the demand zone, right? So this is the supply zone and this is the demand zone. Now have it at the back of your mind that the price do changes. Sometimes the price will go a little bit above the supply zone and form a new supply zone, and sometimes the price can go a little bit below demand zone and form a new demand zone. So that is why you need to be adjusting your horizontal line or your rectangle line to map with the supply and demand zone. So now I map my supply zone and also a demand zone. Now after marking the supply zone and the demand zone, I now went back to the lower time frame to see what is going on. So now I went to the 5-minute time frame, all right, to see my levels, very well. All right, so this is my levels that I'm talking about. You can clearly see the levels that was mapped at the higher time frame. Now this is what happened. Let me just make you understand what I'm talking about. This is what happened, right? Now okay. This is what we call the supply zone. This is what we call the demand zone, right? So now whenever the price gets to the demand zone, what happened? The big bands comes and then push the price up, and when the price gets to the supply zone, they come and push the price down. So what you do is this: you simply map the demand zone and the supply zone and then wait for price to come to that zone, right? So now when price gets to this demand zone, what happened? The price tend to get rejected and started heading down, right? Now you can clearly see that the price went down all the way from this supply zone to this demand zone, right? So now imagine how many pips from here to here. Imagine how many pips you are going to make, right? So now when price got to this demand zone, right, price tend to do what? Price tend to range. Like I said, we have drop, base, rally, base, drop, right? So for the fact that at the higher time frame, like 4-hour time frame, the market is a bit of consolidating, right? So we have the supply zone here and we have the demand zone here, right? So now we also have a supply zone here, right? Before the price broke above it, we also have a supply zone here. So now I want to give you a tip on how this strategy works. If a price tends to get to the supply zone, like the price gets to the supply zone, right, what you have to do is you have to go to the lower time frame to see so many rejection. Don't chase the price when the price was still moving, right? When the price is moving, going straight to the supply zone from demand zone, don't try to chase the price, right? Exercise patience and wait for the price to get to the supply zone. Now when the price gets to the supply zone, you don't need to rush to place trade. You have to go to the smallest time frame, which is the 1-minute time frame, to see rejections, because when the price gets to the supply zone, right, the price will tend to do what? The price will tend to range. The price will be consolidating at the supply zone, right? So that consolidation means that the price has reached the highest level, right? The price has reached an overbought condition, right? The price has reached a highest level, and very soon the price will tend to drop. So in that period where the price is ranging, you have to plan on how to place your trade, right? Because this is a 1-minute time frame you are looking at, so you have to look at the support and resistance on that 1-minute time frame. And for the fact that this is clearly at the supply zone, you should be looking to sell, right? You should be looking to sell. So you should be looking for the highest high to sell. So when the price ranges at the 1 minute time frame and then the price tends to go higher, that is where you're supposed to place your sell trade, and then your stop loss will be above the highest high. Right? So if you go to the higher time frame, that high will be in form of what? It will be in form of a wick, right? A rejection wick. So once you are able to place your sell trade and your stop loss above the highest high, you can then place your take profit before the demand zone, because you know that the demand zone is where the price will tend to reverse, right? So now when you do the calculation, you see that for placing your trade using the 1 minute time frame, you are going to have a tighter stop loss, meaning that you are going to risk at least 20 pips or 10 pips, and your target profit will be like 300 pips or 200 pips, right? So once you do that, you place your stop loss above the supply zone and your take profit before the demand zone. So when the price now rally down, it will not trigger your take profit. So once the price trigger your take profit, you know fully well that the price is now at the demand zone. You do the same thing. You also go to the 1 minute time frame to see what consolidation at that demand zone. So once the price is consolidating at the 1 minute time frame, that is ranging at the 1 minute time frame, you do the same thing. You wait for the price to drop right very well at the lowest low for you to place your buy trade. Then your stop loss will be below the lowest low, and then what? Your take profit will also be at the supply zone or before the supply zone, right? So by doing this, you are risking small money and you are targeting to make bigger money. So this is how I was trading from Monday, knowing fully well that the price at the daily time frame is going up and at the 1 hour time frame is going up. So this was exactly what I was doing. I was trading based on supply and demand zone. Now, this is what happened. On Thursday, the price went high as 2065. So this is where the price was on Thursday, right? As high as 2065. No, now Friday is the NFP, right? Friday is the NFP. I knew fully well that the NFP news is going to push the price. Now, for the fact that the market is already at the supply zone, I know fully well that the direction of the market is going to be down, because the market is already at the supply zone at the higher time frame, because the market is already at the supply zone. Because when the market went as far as 2065, the market tend to drop to 2056. So this was where the market dropped on Friday and started to consolidate, right? So I knew fully well that the market is still at the supply zone, and I know that the NFP is going to push the price down because the price is already at the supply zone. So what happened is, when I woke up, I didn't even wait for the news to be released, because I know once the news is released, the price is going to move at a high rate. So what I did, I already knew that the price is at the supply zone and the NFP news is going to push the price down. So what I did was I watched the consolidation, because this was what the price was doing. The price was consolidating right before the news dropped. The price was consolidating between 2057 and 2052. So this was how the price was consolidating, right? And I know fully well that this is clearly a supply zone. The price has reached a supply zone and the price will tend to drop. And for the fact that NFP is coming, it is going to push the price down. So what I did was I monitored the price for it to make a pullback to this high, right? To this high. So this is where I was waiting for the price to make a pullback to this high. So this was where I was waiting for the price. So when the price now makes a pullback to this high, so this was where I placed my sell trade, right? This was exact point I placed my sell trade, and my stop loss was 20 pips above this level. So my stop loss was 20 pips here, and I placed my sell trade here. And what was my take profit? My take profit was at the demand zone. So this is clearly the demand zone. Like I said, this is clearly the demand zone, right? If you watch, you see that the price has been respecting this zone, this is clearly a demand zone. I know fully well that this is where the price will tend to receive support. So this was where I place my take profit. So if you do the calculation, you see that this is pure 300 pips. So I risk 20 pips to make 300 pips. So what happened? The price consolidated until 2:30 p.m. when the NFP news dropped. The price tend to drop at a massive rate. So the price dropped and smashed my take profit. Right? So when the price now smashed my take profit, what did I do? I knew fully well that this is clearly a demand zone, right? And the price has reached an oversold condition. So what happened is this: I knew fully well that the price would tend to reverse from this point. So what I did, I went to the lower time frame, like the 1 minute time frame, to see a consolidation at this level. So at the 1 minute time frame, I discovered that the price was ranging at this level. That was when I knew that this is clearly the level where the price will tend to reverse from. So what I did was I waited for the price to drop a little bit for me to place my buy trade. So when the price dropped a little bit, I placed my buy trade somewhere around here. So this was where I placed my buy trade. Somewhere around here, I placed my buy trade, and my stop loss was still 20 pips. My stop loss was still 20 pips. Somewhere here was my stop loss. So I placed my trade, my buy trade at 29, and my stop loss was at 27, right? So my stop loss was somewhere around here. That was my stop loss. So now when I placed my buy trade and placed my stop loss, I knew fully well that my take profit is also going to be at the supply zone, and this is clearly the supply zone. So this was where I placed my take profit. Like I told you, I normally place two trades. One, I have a fixed take profit, and the second one I don't. But in this particular scenario, I decided to do what? To have a fixed take profit target, and that is at the supply zone. So this is where my take profit is placed, and you can see that the price was rallying up till it closed on Friday midnight. So I believe that by Monday the price will continue to rally up until it gets to this supply zone. That is where price tend to receive resistance level, right? So this is how I trade supply and demand zone profitably, and this strategy has been making me money consistently from Monday to Friday without a single loss. So this is how I trade supply and demand trading strategy profitably, and for the past 5 days I've been profitable consistently using this supply and demand trading strategy. So my advice for you guys is to go to your demo account, backtest this strategy very well. Once you confirm that this strategy is working for you, then you can implement it in your real trading account. So I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Bye.